Good morning, traders. Welcome to Trading Together. I'm Mel Gacee. Today is Tuesday, August the 18th. How's everybody doing today? Welcome, welcome. We opened up this morning with a gap down, pretty good sized one, about 40 points. And we've been fighting ever since to hold on. SPX is holding on to 7,700 by the skin of its teeth, really trying to hang. We're getting a nice big green bar right here. But we are looking for I think, 7,700 to get broken today and a farther drop down. But we'll go into that in just a minute. First, let's take a moment and say hello. Elisa is here. Good morning. If you're here and you haven't said hi, drop your name in the chat. It's always fun to talk and to get to know each other. And I am here to answer any questions or comments you might have. My goal here is to help traders of all levels. So look at this nice bounce here. So if you have any questions, especially if you're new, don't be shy. Drop them in the chat. Let me help you with that. Some people are intimidated and they think, oh, it sounds like a newbie question. Honestly, I promise you, somebody else has the same question. Don't be shy. Drop it in the chat. Let me help. That is why I'm here. All right. So this is an educational stream. I'm going to take some trades today if we get the right setups. And we're going to analyze the market. So this is for learning. If you choose to take a trade with me, then you're going to do that at your own risk because this is educational. I'm going to talk through why I'm taking the trade, where I'm taking the trade, and I'll give you all the kind of the inner workings of all that mess up there. So yeah, don't be shy. Drop your questions and take trades at your own risk. Okay, let's take a look at these charts. So we just got this nice push, another bounce to try and recover 7,700. That's really been the goal today. So let me get over to my charts. We'll zoom out. I'll show you what the first morning looks like. Good morning, Maria. So good to see you. We will take a look at what the beginning of the day looks like. So basically, it looks a bit rangy. You can see, looks like they're trying to form a downward trend. We've got a lower low, lower low. So we've got this low, lower low, lower low. So that begins to form the bottom of the channel. The top of the channel is also lower low. This one is the same, right? So this is not a lower low. So this is more of kind of a top forming here. But we did go on to make another lower low. So we'll give it some room to tell us what it really wants to do here. Good morning, Guy. Good to see you. So yeah, it wants to show us that it's making a downward trend. And you always have to question that because are they making a downward trend and are they pushing the market down today, or are they going to turn and try to run up and fill that gap today? Either one could happen. But we'll go through some of the daily charts in a little bit and I'll show you what I'm thinking. The semiconductors and the Mag 7s are all sitting at a bit of a precarious level. They're all sitting on their 50-day moving average. At this point, they've lost it. Now, that doesn't mean they can't recover it today, but as of right now, the semiconductors have lost their 50, the mags have lost their 50. So we're starting to get a little bit of precarious positioning going on here. Could this be nothing more than a continuation of our consolidation? And I'm talking about big picture on the daily. We'll go get to those charts in just a minute. Could this just be an extension of the consolidation phase? Yes, but it looks a little suspicious. Here is the other thing we have going on. We have VIX-piration tomorrow. That's the expiration of the VIX options. And VIX is an index. It is the volatility index. Why it's called VIX with a V, because it's the volatility index. It expires tomorrow. VIX is one of the rare products that has AM expiries. So if you trade the VIX, be aware that your expirations will be in the morning, not in the afternoon, like most products. Most products do trade their expirations in the evenings. Okay, so the expiration tomorrow morning and OPEX on Friday. Okay, that's a combination. That's a volatile combination there. And we could see volatility. We could see the market start to come down. I do think we're going to see a pullback before the midterms. However, I don't think they're going to let it crash until after the midterms. And I do think we've got a crash coming. Doesn't have to be even this year. It could be 2027. I do think this bubble is going to have to pop. There is no, I just don't see any other way around it. But it doesn't have to happen for a long time. So I think we're going to get some kind of a pullback here, maybe up to 10%, which would put the SPX at 7,000. And everyone's going to freak out when that happens. They always do. But remember, 10% corrections are healthy. We'll see them once or twice a year. Very common. They have to happen. They help the market to reset. They help it to get grounded again. We cannot sustain these valuations, at least in my opinion. So these corrections help to reset valuations, reset the market. They're just healthy, right? So I do think that's coming. I do think it's coming sooner than later, but it doesn't have to. We can sit here in consolidation land. We can push a new high before midterms. Okay. All right. That is so obnoxious. As you can tell, I'm not quite finished with my alert system. I think it's trying to tell me that we're in a cell. You think it was obvious enough there, or do you think I need it to be a little bit more clear? All right. However, I'm not necessarily going to take a put here at the low of the day. We are sitting at 767.4 with our low on the SPY. Not going to take a put here right at the low of day. That's just foolishness. Now, if we break the low and we continue on down, which we could, that's a different story. But this low right here is just under 7,700. So they're still trying to hold on to 7,700. That's basically what these lines are here, roughly, plus or minus 5 points, right? But roughly these lines are going to correspond to 7,700 on the SPX. Good morning, Dan. Good to see you. Good morning, Scarface. Good to see you. Elisa's saying the alerts are trying to tell me something. You think? Maybe I just need to be, drilled into my head. All right, let's see here. Guys saying AI isn't the shiny new toy it was either. Yeah, it's not. I mean, AI is here to stay. So I was talking about this on my first stream. The .com bubble has a lot in common with the AI bubble, and I do say AI is in a bubble. It's very similar, right? The internet was here to stay. The internet was the greatest invention of our time, of our lifetimes, the internet. Those of us that are old enough to remember life before the internet will all agree the internet was the greatest invention of our time. And so during that time frame, the .com bubble went insane. And there's a lot of similarities in the AI bubble, a lot of similarities to the .com bubble. So the internet was here to stay. It was life-changing. I think AI is here to stay. I think it's life-changing. It's already changed my life. I love AI. I use it every day. I pay for it. I pay for Claude, and I use it quite a bit. Love it. But that does not change the fact that I think it is in a bubble, at least as far as stock valuations go. So when the .com bubble happened, any company could go out there and put a .com at the end of their name. And when they did that, poof, their stock would blow up. It would, another winning stock. And it's not that different with AI. All the company has to do is say, we are AI. You know, we've got OpenAI, we've got Anthropic. Of course, they are. But all you have to do anymore is say, we are an AI company, and oof, it's the magic word. So that is part of the similarity to the dot-com bubble. We've also got this circular financing going on. And so you'll see me over the last few weeks really watching semiconductors. Why is that? Why am I watching semis so closely? Well, number one, they've been kind of secretly, or quietly, I should say, not secretly, quietly, they've been providing some leadership to the market. We've been kind of following the semis. But the other reason is they are what's called the picks and shovels of this movement. So in the gold rush, who made the money? Was it the miners? Did they make some of them, a handful, made money? Who really made the money? The guys selling the picks and shovels. That's who made the money. So in a sense, the semis are the picks and shovels of the AI boom, right? Because they are the chips, basically, in a nutshell. They're the chips. They're the manufacturers of the hardware. And you can't have any of this without the hardware. But once those cracks start to form, and they already have, you've heard me talking about the South Korean stock market and how that just imploded on itself because of this concentrated trade in the semis. Once those cracks start to form, the whole AI house of cards begins to crumble. It's all built on this circular financing. OpenAI is the collateral for all of these big guys financing. Well, OpenAI hasn't even been profitable. So it's all this circular stuff going around. And once those cracks start to show, which they already are, the whole house of cards begins to start to tremble. And the big cracks that are starting to show now are number one, we've got compute power. So companies like Meta coming out and saying, hey, we'll rent you some compute power. They can all do that. All of them can do that. They've got it, right? Number two, China saying, hey, we can make that chip. You don't need to pay. You don't need to wait 3 months for your chips. You don't need to pay that much. We can do that. And don't think they're not working on that. They certainly are. So competition, cheaper manufacturing, hardware, all of these things are going to start to expose this big financing bubble of billions and billions of financed dollars. I think NVIDIA just came out with like $500 billion financing deal that they wanted to do. And they're all financing each other in a circle is what's going on here. And so those cracks are starting to show. I think the bubble is going to pop, but they can pump this up for a long time. The dot-com bubble lasted a long time. We didn't crash for quite a while after these crazy heights that had been reached in the dot-com bubble. We did not begin the crash for quite a while. Those things climbed for a very good long time. All right. Let's see. Dan saying, on a ranging day like this, could buying calls at the low of the day and puts near the high of the day with other indicators like the MACD be a good idea? I don't know that we're ranging, Dan. We have been, but it feels to me a bit more like a sell-off in the works here. Don't trade on that. Don't quote me on it, but it feels like we could be selling off. Once they give up the ghost of 7,700, I think we've got more to go. All right. And here's the thing. Buying calls at the high of day and puts at the low of day, it's early on. We're not completely sure that we're at the low of day. In fact, I would say we probably are not at the low of day. I think we've got new lows to come. Are we going to get a new high of day? We could. I don't know. Are they going to turn and push it and fill the gap? We could. But it feels a bit more like a sell today to me. The Qs are down 1.8%, so that's a decent drop there. More importantly, SMH and SOX are down 5 and 6%. That's extensive. And the mags are also down. Where's my mags? Ooh, mags are recovering a bit. Mags are down 0.5. So I personally don't use that kind of a strategy, Dan, but it can work. It absolutely can work. Um, if we bounce off the bottom and go hit the high and bounce off the high, you absolutely could make that work. I don't trade that way. I'm actually looking for setups, very specific setups. So I can't really speak to that strategy, but if you nailed it, if you nailed the top and the bottom, then yeah, it could work. All right. Bottom, speaking of bottom, here we are about ready to give us a new low. We're getting close. 76.95. It's getting close to losing 7,700, guys. So I am going to load some puts here at the 768 strike. I'm not in though, because I really want to see that they're truly giving up 7,700 here. I don't know that they are. Let's watch and see. All right, Dean's saying that's how Wells Fargo was founded. The symbol being the wagon. Yep. They were selling the picks and shovels and cloths and pans to the miners. Yes. Yep. Exactly right, Dan. Exactly right. So watch those semis. They are the picks and shovels. When the picks and shovels start cracking, everything else cracks. All right. We are sitting at 76.94. Are we giving up the ghost here? We giving up 7,700. We've got a new low of day. I'm definitely not entering puts on a new low of day. Going to give that a minute. We'd like to see a little bounce before we enter it into a put. And the Q's also holding a current low at 715. Again, remember the Q's are down almost 2%, so that's not little. That's a decent sell. The SPY is only down 0.6, 0.7 right now. I think it's got more to go. I'll show you the dailies here in a minute, and you'll see where we're losing the 50s on some important ETFs. We're losing the 50 on the MAGs. We're losing the 50 on SMH and SOX. And so we're in, like I said at the top, we're in a precarious position. We could fall from here, or they could pull it right back up and we'll just float some more sideways. Or we could go make a new high. But with OPEX and expiration coming up, I don't know that we're going to make a new all-time high this week. I don't think so. 76.94. Q's wanting to hold. Little bounce. See how the Q's are making like it looks like they want a bottom here. Let's see what we get. The other thing that we've got going on today is an elevated VIX. We'll go look at that daily chart in a minute too. Yesterday, you'll remember I talked about a rising bottom on the VIX and the VIX getting ready to start moving up. That's exactly what we got today. So second day in a row, we've got a rising bottom on the VIX. We need to be watching to see if it's going to give us a spike. Again, everything is just perched right here at the edge of a drop for the markets. So it doesn't have to happen, but I sure am starting to see some setups. So VIX popped up again today, almost 5%, 5% yesterday. Two large gaps in a row on the VIX, upward gaps. Oil came up a little bit, 1% on crude, almost 1% on Brent. Apple climbing after being down this morning. Apple's up 1.5. All right, guys saying, couldn't help myself. We've been down a good portion of the ATR. Can't bring myself to short this level. Same guy. Subsequently, I'm in a very small call. See what happens. Good luck, guy. Good luck. Yep, I was not going to short the bottom either. Not saying this is the bottom. I think we'll go down some more. But I don't like to short the new low of day. Speaking of volume, we've got 767. 768 is our put volume, the strike with the most puts. 767. Then we've got volume growing at 66 and 65 and even 63. So we have volume growing down at 63. Right now, the call volume is sitting at 769, followed by 770. We have some volume growing at 771. Some. All right. We are also squarely in negative gamma, have been since the open, and we would expect that on a day where we gap down 40 points at the open. Gamma sitting at 2.5 billion negative net. So we've got 3.5 billion in puts, only 950 million in calls for a negative net gamma of 2.5. So there you go. 770 is our put wall. 773 is our call wall. $76.96. They're not really giving up 7,700 yet. They do this little drop here. Yes, we got down to 76.94, and it looked like we could lose 7,700, but they're still holding on. And again, these lines kind of represent 7,700 roughly. They're still trying to hold it. You can see the Qs trying to hold this bottom as well. So right now, I don't see a reason to short. Your calls are looking better there, guy. $15.92. Interesting to see the VIX continue to pull up here a little bit. Almost back to 16. Okay, there's a spike. There you go, guy. That ought to give you some profit. 1591, almost at 16 on the VIX. I want to look at the daily charts. I want to show you what I mean when I say we're looking a little precarious. I'm not going to take this call. I'm going to wait and see if they 25, nicely done. I'm going to wait and see if they recover 7,700. I think they're going to. They're pushing it. Okay, so here's the Qs. And the Qs are looking rangy, right? That's all you can say about the Qs. They look rangy. We hit the high in the very beginning of June, all-time high, immediately reversed, pulled up, big reversal, down through the 50, that's the blue line, down through the 100, that's the green line. That line's got to go. Boom, you're gone. And then big reversal off of the 100. So that's when we got that skyrocket effect over that week where we basically just went straight up for a week and then got a week and a half, 2 weeks of sideways chop. Nothing but nothing. And that's been a tough couple of weeks to trade. Here today, they pushed up through this sideways choppiness, gave us this high. On the Qs, it wasn't a new all-time high. On the SPY, it was. And then this gap down today is pretty significant. That's a decent-sized gap down from here to here. And we are right back in the zone, slightly below it. A little bit, looking a little bit weak here, isn't it? It's looking like some weakness starting to show. It could just be consolidation. We don't know that yet because we're right here in the zone, but it's starting to look weak to me. It's starting to look weak. Now, when we look at the semiconductors and the mags, that's where it's starting to look even weaker, okay? But first, let's look at SPX. All right, there's 7,700. Let's see if they can hold on. All right, here is the SPX. And look at the candle we're making today. First of all, doesn't it just look like just some abandoned little blip out there in the blue sky? It does to me. It looks like a little a gap down and just a little blip of nothing here, with just kind of floating. But where it's floating is important. It's floating on 7,700. So that's where it's trying to hold. But this candle is it's just puny. There's not much to it. The strength is in the gap. The candle itself is not showing a lot of strength. The strength was in the gap. Now, the 50 for, they're losing 7,700. This is the battle, guys, 7,700. It's going to be the battle until it isn't. So we got to watch for that to break one way or the other, up or down. So again, 7,700, we hit it back here and bounced off of it. We came right back down to hit it again. What will we do? Are we going to bounce off of it? 50 is way down below us. So we're in a position of strength. We just hit an all-time high at the end of last week and then reversed off of it. So right now you can see the round over. This is why I say we're a bit precarious. We could just go whoosh from here. And I said this on the other stream. There's a pattern. Somebody made it up called the puking camel. And you can see it here, right? Here's the body. There's some legs right there. Here's the long neck and the head. If it pukes, that brings the price down a good bit. So that pattern name I think is really funny, but I see it. I can see the puking camel, and if it pukes here, it could come down quite a bit. So we'll be watching for that. But that's what this is looking like to me. This starting to round over. Now it doesn't have to complete that pattern, We can just go sideways, or of course, turn and make another new all-time high. But remember, we have OPEX, we have expiration, we're going into midterms. That is a volatile period. Again, in the big picture, I think even if we drop, they're going to pull it up before midterms. I just think they will. But I do think we're going to get a drop before then. I think it's going to happen. And it could be, again, as much as 10%. Are they going to let it crash and burn? I don't think so. I really don't see that happening before midterms. So, and also we've got some IPOs coming out. Anthropic and OpenAI are both trying to IPO. So that's the sound I can't stand. I need to fix that chime. So OpenAI and Anthropic are also going to IPO, billions and trillions of dollars of market cap there. So that I doubt that we're going to see any kind of meaningful crash. A 10% for someone who hasn't seen one before, if you're a new trader, yes, it's going to feel like the sky is falling. But 10% is normal, natural. We have to have them. They're good for the market. All right. Guy is wearing the bear pattern. Yeah, okay. Me too. So again, we'll be watching for this round over. It's either going to complete and start dumping, or we're going to consolidate some more, or they're going to give us a new all-time high. My guess is correction and then upward move before midterms. That's just my guess. We can't trade on that. We don't want to have a bias. We've got to trade what the charts give us. But this is what we look at. Okay, let's take a look at the mags. Mags were recovering a little bit last I checked. A little bit. Mags looking a little bit more precarious. Where are they perched? Right on their 50. This blue line right here is the 50-day moving average. And you can see that the mags, remember the mags are the ETF that holds the Magnificent Seven, right? Apple, Amazon, Microsoft, Meta, NVIDIA, Google, Tesla. That's the Mag 7. That all goes inside this ETF, and this ETF tracks them all together as a whole. So I like that. All-time high was reached way back in May. Pulled way down, big correction on the mags, pulled back up, pulled back down, pulled back up, pulled back down. What we're doing right here is building higher lows and higher highs. That's what it looks like. However, we're perched right on the 50. Very precarious right here. Earlier in the day, we had pierced it. You can see the wick coming down through it earlier in the day. It's recovered a bit now. But again, gap down, touch the 50. Last time we broke the 50 on the mags, what happened? Major gap down. 66 to 64. So basically a 3% gap down. That's big. That's not little. So 3. Am I saying that right? 1, 16, 6 is 10, is 5. It's actually closer to 5%. Anyway, major gap down. Last time we breached the 50. So I'm watching that. Take a look at the semiconductor ETF. It's called SMH. There's another called SOX. I look at both of them. 671 was the high on June 22nd. And we basically just moved down from there, created this trend, very clean trend. Lower high, lower high, lower high, lower high, lower low, lower low, lower low, lower low. Very nice, clean trend. And then what did we do? We broke the 50, broke the 100, recovered the 100, and whoosh, back up again. What are we doing today on the SMH? What's that? It's the 50. We are breaking it. We're losing it. Last time we lost it, we did a big drop. So be aware, this is a precarious position. If we lose the 50, we'll go straight to the 100 because it's right here. And if we lose the 100, it's look out below. So remember all of the nonsense that we just saw with the South Korean stock market and the fact that they were so heavily concentrated in the semis. They were concentrated in two names, Samsung and SK Hynix. And once the semiconductor trade started to crack like it did over here, Kospi imploded. It was very bad. Lots of South Korean retail traders lost everything. It was really very sad. It is recovering. Kospi is recovering right now. But this is the precarious position that we're in. Losing the 50, coming back down, we'll hit that 100 immediately. And then what are we going to do? Are we going to lose that 100 and drop? Are we going to do that puking camel? Or are they going to try to hold on and manage this for a while longer? Take a look at SOX. It looks identical. See it? High was made end of June. Nice, beautiful downward channel, just like SMH. Beat the 50, beat the 100, reversed off the 100, and back to losing the 50. Exactly the same chart. Has to be. It's the same set of stocks, right? Mostly. So beat this 50 today with a gap down at 100 sitting right below. That'll be the very next target. And then we'll make a decision. Are we going to lose the 100 and drop? Or are they going to hold on and continue this up and down stuff? That's what we're looking at. And on top of it all, the expiration and OPEX are going to add some volatility to that mix. So there you have it. All right, we are starting to come back down under 7,700 here. Sitting right on our overnight low. That's this yellow line. I like puts here for a run to a new low, but it's a little close. I don't know that I'm going to take that risk because it doesn't have to hit this bottom and it doesn't have to make a new low, even though I think that it will. The odd thing is the gamma put wall is still sitting at 770. Let me make sure that's true. Yep, sitting at 770, which is a good bit above our spot. So this is odd. 770 is the put wall, but we do have growing pressure at 768 where spot is, and 401 million at 766. So these little growing levels right below us, you can see them. In fact, let me share that screen with you real quick, and you can see what I'm talking about. It'll make a little more sense if you can see it on the screen. Well, let me look at it, guys. Right there. Now let's try. Well, I can't find it. It's not letting me. Usually I can see it, but right now I can't. Let me try pulling it over here. Maybe that'll help. Well, it's not helping. Sorry, guys. We'll just go ahead and share. Let's see if I share entire screen. Oh, there it is. Okay, let me try this. There, we did it. Okay. So this is the product that I look at. I pay for it. It is it's called Cheddar Flow. I pay like $100 a month for it, and they want me to upgrade to the annual plan. And what we're seeing on chatter flow is, this is the gamma chart. Okay, so right here, let me get to, okay. So this is for all expirations. You can see that we're in negative net gamma for all expirations. And then if we look at just today's expiration, these bars kind of represent where gamma is sitting, where money is sitting, where the dealers are hedging. Okay, so 770 is our put wall. And the spot, that means where we're currently trading, spot price is sitting at 768. That's below. But you can see gamma building here at spot. This is the number that we're looking at. 400, almost 500 million sitting right here at spot. Then we've got 300 million at 767. 300, almost 400 million at 766. So it looks to me like we're building some hedging down below. Up above, what do we have? Look at the green lines. There's nothing. 30 million sitting at the call wall. So virtually no overhead positioning. Now remember, that changes. It doesn't have to stay like that. Gamma changes very quickly because the dealers are light on their feet. They're constantly hedging their positions and trying to stay neutral. So these pictures change quickly. But as of right now, we're extremely bearish. 3 billion now for today's expiration. 1 billion in call gamma, 4 billion in put gamma, for negative net gamma of 3 billion. That's a good amount. It's a pretty good amount. So there you have it. I just wanted to show you that screen because it's a little easier to understand it when you see it than when I'm just calling out numbers. So, all right, let me get back to sharing the chart. Is that right? Yes. Okay. There we go. Back to the charts, getting a push up over 7,700, but just barely. So I'm going to be cautious here. And if I think about calls, one more daily chart before we end here on our analysis. I want to look at the VIX, but am I going to be interested in calls? I mean, maybe if we cross the VWAP, but honestly, at this moment, I'm not super interested in calls. I'll be watching. If we cross the VWAP, I might change my mind. But I did want to show the VIX here real quick because that's an interesting look. We talked about the VIX yesterday giving us a rising bottom. Okay. So here's the daily on the VIX. Now the VIX was green earlier. It's a little bit red right now because it's coming down. That has to do with this push here. Super annoying. Now it's pushing through the VWAP. So VIX is giving us a little red candle right now. But what I wanted to show you was the gap, right? So the rising bottom. Gap up yesterday, gap up today, 5% each time. So the VIX is climbing. Now, right now it's a bit red. So we need to see, is it going to hold here or are we going to keep charging ahead? I don't like these two big gaps. I'd rather see it build structure than just put these gaps out there. It feels, whenever you see a gap, you can kind of think of it as, I think of it as a house of cards. It's wobbly. It's not stable. Gaps need to fill. They need to build structure. When you see price just zoom away in either direction, you're missing structure. And when that happens, price generally wants to go back and fix that. So I don't like these two giant gaps, but I do like the rising bottom. So the question is, we'll zoom out here. The question is VIX going to keep rising and the market going to keep dropping? I think it is. We've got, like I said, VIXpiration. We've got pretty heavy call to put ratio, not put to call. So more calls than puts on the VIX, pretty heavy ratio, almost 2-to-1. And so I don't think it's going to come back down, but it could. What it does need to do is build a little structure in here, but it could just keep charging ahead. And if we get that, we will see the market coming down. So all these little things that we're looking at, the semiconductors being at their 50, the VIX being ready to pop here with the rising bottom, the all-time high slipping away a little bit, 7,700 really struggling. So there's a lot of, and OPEX, that's one of the big ones. There's a lot of stuff going on that would say it's getting precarious. That's all that I'll say. So again, we can't trade on that. We don't keep our bias on that. We trade what the charts give us. Always, always. That's the number one rule. All right, break in the VWAP here. Let me get back to my Qs and my minute charts. So if you look at the minute chart on the Qs, it looks a bit range bound, doesn't it? Let me get back there. Looks a bit range bound to me. Started off the morning with this downward pattern. Okay, there's a nice rejection. I'm going to look at puts here on the 769 level. I'm going to put a limit on just for 7%, just in case we get any spikes. Okay. Give us a little entry here, guys. I don't want to give us an entry. Come on. 7,700 even. So I'm going to be careful shorting here. I don't really want to short right at 7,700, but I also would like to see it give us a little pullback before I jump in. See this trend that it's trying to make here? It's trying to make an upward trend. So we've got to be careful. Don't want to short 7,700. I do like the green candle. What I was saying about the Qs are that it's kind of building this downward pressure, but the last few minutes have started to build higher highs. So overall, looking a bit like a range to me. Okay, back down to 7702. Zoom in on the Qs here and see what we're doing. Yeah, I don't know about it. I don't know if it's here. Not feeling it just yet. Like I said, I don't want to short 7. Hold on to it. All right, looking like call signals here, pushing the VN. Could we consider calls here at the break of the VWAP? We could. We're sitting at 7705. We haven't held the break of the VWAP all day. That could change, but see how we beat the VWAP, lost it, beat the VWAP, lost it, beat the VWAP, lost it. We haven't held the VWAP. We haven't held over it all day. We've spent more time under it than over it. But this is a nice strong green candle. If I were to load calls, they'd be at the 768 level. Just nice green candle. Getting a little pullback back to the VWAP. The Qs haven't VWAP yet, so I'm keeping my eye on that. Okay. 77.05, just kind of where we're sitting right now. And again, the Qs have not quite beat their VWAP yet. We're sitting just over ours. It's a nice V off the bottom. You can see it here. Really nice V right off the bottom. Same on the Qs. Qs have done even less with their VWAP than we have. Tried here for a while, couldn't do it. Popped over it here and here, couldn't do it. So the Qs are trying again. Let's see what they get. There's another rejection on the SPY. All right, Q's pushing on through. Rejecting. Can't make up its mind here. I'm sitting at the VWAP here for about 9 or 10 minutes and not making a decision to beat it. So that's not positive. A little bit of reject here. And if we get a hard reject, I might jump on puts, although it feels like it could be trappy, doesn't it? Let's see. Puts would be at 769. Q's still trying to tackle the VWAP. We're still trying, but we haven't gotten on through it yet. 77.03. So we want to see a couple of things. We want to see him break this structure, meaning break down through. If you drew a line, visible line, you'd see us right now almost breaking through it. We're rejecting the VWAP as well. So that is negative. But again, we're just sitting on 77.02. So we don't want to short 7,700. I don't want to short that. Structure hasn't broken yet on the Qs. You can still see it's nice and strongly in place. Structure is starting to break on the SPY. So that looks like a failed break of the VWAP to me so far. Doesn't mean they can't turn and push it up through, but as of right now, that's a failed attempt. That's bearish, of course. So moving forward today, I do feel like 7,700 is the battleground. We've spent a long time here. If you zoom out, you'll see we've spent a long time just kind of over under it. All of this is to hold the 7,700 level. So that is kind of the battleground here. We do have volume below it. In fact, let's look at the SPX volume. So on SPX, our highest call volume is sitting at 7720. And then our put volume is sitting at 7,700 right here, with volume growing down to 7680, maybe even 7670. All right, not dropping it yet. Let's look at XSP real quick. Kind of evenly balanced here. Okay. All right. Well, so moving forward today, again, for trading today, a break here of the VWAP and a strong push, we could trade calls. I feel okay about that. But right now, they haven't been able to hold over the VWAP. So if they can push it up over with some conviction and hold it, I'm good with calls. If they drop it back down, I'm good with puts. I don't like puts at the lows, and I don't like puts at 7,700. So we've got right now at this moment, we've only got 5 points down to 7,700. So we could trade from here down, but I wouldn't trade down here. I wouldn't trade puts down here. Not until this low is neutralized. Once it's taken out of commission, then it's different. But right now, I'm not going to trade puts there. So calls over the VWAP with a strong recapture, and puts on a good rejection of the VWAP with at least 5 points to 7,700, which is right where we are right now. But no puts here at the bottom until we break that low. So that's kind of what I'm thinking of. Scarface saying, so more put versus calls on the SPX. That is what I saw earlier. Let's take another look. Thinkorswim has a pretty cool little feature that lets you look at today's options statistics. So let's go look. It'll give you the put call ratio. So scroll down all the way down here. Put call ratio, puts are higher, 1.38. So by a good little bit there, puts are higher. 1.1 million in puts versus 800,000 in calls on the SPX right now. So definitely higher put to call ratio. And that makes sense. We're in negative gamma. That's kind of what we're seeing. But that is going to do it for me today. We will be back again tomorrow at 11 a.m. Eastern. And if you're trading VIX, be careful because we do expire in the morning. VIX has morning expirations, which is a little weird. Okay, guys, saying on the SPY 5 minutes, we're at confluence with the VWAP 50 and the open line above. Although I like the previous two candle wicks. Yeah, confluence is definitely coming in on a lot of the different time charts. I see it too. Guy, you're not wrong. So thank you for pointing that out. All right, guys, we will be back again tomorrow at 11 a.m. Eastern. I appreciate you. Thank you for being here. We will see you again tomorrow.